choose this as the most important topic that you need to know. You must have heard about Q zones. You must have heard about SMC trading zone or trading time or the most active hours of the day. Um, let me tell you that this is very, very important for you to understand because smart money concept or every concept works mostly when the specific hours I want to show you out to you is on. Okay, that is when you see the liquidity. That's when the liquidity is formed. That's when the structure of the market is formed. That's when you find your volume. That's when you find the institutional activities coming up. All right. So the top hours, the first one is the London session, which is from 7 a.m. to 10 a.m. We have the New York session, which is from 12 p.m. to 4 p.m. And the most active of it all is when the London session clashes with the New York session. This is where you enjoy your trade because that is when the biggest move takes place. All right. So why do 90% of the peers across all derivatives are very much traded in this time? Is because the big banks, the hedge funds, and major institution trade. They are executed during these hours, and there are many smart money entries during this time that create the liquidity gaps, the inducement, the stop loss hunts, and the other block shift and change of character and the like. So if they are not active, if these institutions, the smart money players and the big banks and whatever, if they are not active, there's no way you're going to see any chart in that on that day. So they need to be active. They need to create patterns for you to follow. They need to create patterns for you to lay down, and you also step on it and also make a proper arrangement on it. So the liquidity is highest when major sessions are open, and SMC relies on this liquidity sweep. When it is swept, that is when the real move starts. Okay, and they want to take out all the stop losses before the real move happens. So I tell my students that they need to buy first before selling, and also they need to sell first before buying because that is what they actually do. All right, so I want you to pay attention to the time at this bottom here. So let me use this. So the time at this bottom here, I want you to pay attention to it because we'll be using it to navigate the trade, the trend, and what is actually happening during the opening session of the London and also the New York, and what happens when they meet at the same time as well. All right, so this is going to be my case study. This is where I'm going to begin the session from. This is June 25, June 23rd, 2023 on Monday. So I'm going to use the vertical line, and you see the London opens on this time, and you can see when the London opens, it created a downward push to the downside. Let me tell you before I even go further, I'm a swing trader or somehow like positional trader because I hold trades for multiple days and weeks, right? So I use the 4 hours to check my trend. I use the 4 hours to even execute my trade sometimes. And if I want to refine them, I use the 1 hour. I don't go lower than that because those are just noise for me. And that has been working for me for a time. So this is how the trade moved when the London opened. You can see it created a downward push. And you can even testify that the New York session opened with it, and it also created what? A downward push to the downside to sweep the liquidity. Okay, now the liquidity that it swept is like you see that from this area to this area, you can see that all these are swept. All these are swept to this area from this area. Let me use this horizontal. All the money here are already swept by this counter order. This is a buy order. We have a sell order to counter it. That is how the market works. That is exactly how the market works. Okay, now we have a sell order at the other hand. We have a sell order, right? And another buy order to counter it up. You can see we have a sell order to this point. Let me just use this. Then we have buy order to counter it to the upside. You can see the buy order even extend to this area, but from here you can see we have a buy order to counter it. Now looking at the horizontal line as well, you can see all the sell order has been fulfilled by this buy order that took place from this point, from here to this point to this side. It filled this complete order and created another sell, higher low, and pushed to the higher side. That is how the trade works. Okay, that's how it works. Now, let me go back to our discussion because I'm just showing liquidity instead of. All right, so this is it. The market structure forms properly when this session is on. So during low volumes like the late Asia session or Sydney session or the Japanese session or what they call it, the price becomes choppy. Okay, the trade becomes choppy, the price becomes choppy, and you may not even see things clearly during this period. This is 4 hours, but if you want to see clearly, we might need to go to the lower time frame, like 1 hour, 15-minute time frame. But because I want to see the structure properly, that's why I'm used to the 4 hours and the 1 hour time frame. I don't go lower. All right, so SMC requires clear market structure and break of structure. You can't tell me that you can't see the break of structure at this, because you can see now that we have this swing here to the downside. You can see lower low, lower high. See. Then from here, we have an extension to the upside, higher high, higher low, higher high, higher low. You can see higher high, higher low, and that. This is like change of character. Okay, this is like change of character, deceiving that we are coming down because that's taking out this higher high, almost to the level of this, and they push to the upside. All right, so market follows the same pattern over the time, but your understanding is based on your confirmation on what has happened in your maybe area of interest or your point of interest, whatever you call it. But the reactions of or the confirmation of your reaction must follow whatever the trade is coming up with. All right, so session based patterns, you can hear them saying AMD, accumulation, manipulation, distribution. That is how the market moves, right? But let me tell you that the clear way to see the trend is when you focus on the higher time frame, the 4 hour time frame, the 4 hour time frame. When you focus on it clearly, you can focus easily and you can execute A plus trades, and it's definitely going to give you a good entries. To give you good entries. Okay, so look at this combination of time together. We have London, we have New York. You can see London, New York, this Tokyo, this London, and this New York. You can see the combination of the two. This bought and this sold. In the same New York, before it closes, this is 2 o'clock, this is 6 o'clock. So we have 2 o'clock and 6 o'clock. This is 2 o'clock and this is 6 o'clock. Now, the time between these two is the most active, because I told you like from 12 to what's it called? From 12 to 4. So here we have 2 o'clock. Here we have 2 o'clock, and here we have 6 o'clock. So between this time is the most active. So it has been selling in this period. If we go to the lower time frame, like let's say the medium time frame, like 1 hour time frame, I want you to see this reaction very, very well. You can see it. You can see it. We have 1, 2, 3. For 3 hours, it has been selling for 3 hours before the business of the day ended. The business of the day ended with consolidation. You can see it clearly, right? I'm sure you can see it very clearly. It ended with consolidation. So at this point, you can see 2 o'clock, New York opened with a sell, 1, 2, 3, sold to the downside. And as it sold to the downside, what do you notice? A consolidation before it closes. It closes, this is Sydney session, Sydney, Tokyo session, like that. And it sold to the downside before pushing to the upside again. So when you notice the London session, trust me, that is the most active period. Look at the London session. Just look at what's happening here. This is 1 hour time frame. London open here, and this is New York open. You can see London open with a sell, telling you that we're taking the liquidity, we're sweeping the liquidity of the Tokyo before moving to the upside. Manipulation, that is manipulation, telling you that we are going downstairs, but we're not going downstairs, okay? We are going upstairs. So this little change here must have taken out so many people's loss. Okay. So most people tend to not get it very well that this is just a manipulation. This is a pure manipulation. It's a pure manipulation. And they push it to the upside. Then you can see this time, this is 2 o'clock and London closes at this time. This is when London closes. You can see this is London and this is when London closes. Push 1, 2, 3, buy. It always happen like that. It always happen like that. Always happen like that. When you look at, when you get the push, you look at what is happening in London and what's likely to happen in New York. Okay, so before London closes and before New York closes as well, it creates a very massive move. Look at this move, consolidation to the upside, London, then London's about to close and it pushed to the upside again, consolidated a bit before going down for New York, and Tokyo sold again, things like that. So that is how some days you can have little trade volume like this London open by New York like that swinging. But the most important thing is for you to see how the trade works. Okay, when you see how the trade works, what is your strategy? What is your process? What do you use that aligns with the trade, with the session-based tendency that, okay, I'm expecting a fake out in London and a sweep at London open, okay, before the Asian closes. And the New York is to grab my liquidity, and the New York opens or news release is going to give me the exact move for the day. So when it overlaps, you're looking at reversal or the high probability moves, the most expensive move, the most advantageous move happens when it overlaps. Because SMC work during specific hours because that's when the smart money is playing. And this hour gives more manipulation, better setups, right? More volumes, more reactions, more liquidity, more stop loss hunt because liquidity is stop loss hunt, more volatility and faster moves. So that is how it happened. That is how it happened. That is how the trend is to sweep liquidity. Just look at it. Sweep liquidity. This is on Tuesday. On Wednesday, we sold again, but it didn't sell completely. It came to look at the swing high at this point. And from there, it sold. This is the swing high at this point. And from there, it sold to the downside. Okay, so that is how the trade, that's how it works. Okay, look at another swing here. From this swing here, this particular swing, the next day as well, 27 June, it sold again to this downside. You'll be expecting it to come and repeat the sell again, but it came down to sweep liquidity because there are so many others that might be down here, and people will be like, okay, we are going further to sell, but from here it terminated from this part and it pushed to the upside. When it got here, it respected its zone, okay, pushed to the upside, sold a little bit, and this will tell you that we are coming to test the fair value gap. This is the fair value gap here. And for the fair value gap, I tell my students, like, when you're using the fair value gap, just look at the 50% of the fair value gap and look at what is likely to happen. When you have a bounce from a 50% fair value gap, we are likely to take what? A buy. So this is a buy from 50% fair value gap to the upside. It didn't respect it anymore at this point. Okay, some might call it other block or thereabout. Didn't respect it at this point. It got to this point. What happened? Little respect and push it to the upside. So any large move you see, you must use your fair value gap to test the reversal. There's a particular one that happened recently. This is it. This is a fair value gap. There are two. This is one. This is another one here. This is a very small one, but if you go to the 1 hour time frame, it's kind of larger. So, but you see, expecting a test into this and reversing to the downside. So the trade respects these hours because that is when the most active time is. Okay, look at this time. This is Tokyo. This is London. London open, New York open. All are selling. They are all selling. All right. So thank you so much for your time. See you again. My name is Pash on Air.